been quite the year for U.S. banks in 2019, and all the major U.S. banks have reported. What's your take on fourth quarter earnings?
Q4 was a really solid end to 2019. When you look at the large cap US banks, the majority of them actually beat on earnings expectations, and on average they posted earnings per share growth of 8% compared to last year.
And are there any names that stood out for you, and why?
One name that really stood out was JP Morgan. They beat estimates by a mile and they grew earnings per share by 30%. As has been the case with JP Morgan over the last number of quarters, last number of years, the diversity of their franchise, their scale in the US, their ability to take market shares really worked in their favor. But what really helped this quarter was their corporate and investment bank, which saw profits increase by 50%. And that was on the back of really strong client activity, especially in their fixed income, commodities, and currency trading business.
And going forward, what are some of the headwinds and even tailwinds for U.S. banks in 2020?
It's hard to talk about banks without talking about interest rates. The reality is that lower rates are a headwind to U.S. bank profitability.
Because it compresses their net interest income that they earn.
Exactly. So for context, large cap U.S. banks make up half of their revenue through net interest income.
And what is net interest income?
You can think of that as the interest earned on loans minus lower cost deposit funding. And so with the Fed cutting rates 3 times, we've seen some pressure on that net interest income line, which we would expect would continue into the first half of 2020 before normalizing in the back half of the year.
Looking back to U.S. bank performance in 2019, they actually beat the broader market. Why is that?
2019 was an incredible year for the U.S. banks. If you looked at the S&P 500 Bank Index, it was up over 40%, and names like JP Morgan were trading near all-time highs. It's interesting because if you and I sat down at the beginning of 2019, we could probably come up with a list of reasons why banks would actually underperform in the year.
So quite a difference from 2018.
Yeah, and on top of that, I think we were in the throes of a trade war, there were recession fears. On top of that, the Federal Reserve had quickly pivoted their policy, and so we really had no idea how deep or how far they would cut rates. And so fast forward to the back end of 2019, we started to see resolution on a number of these items. Positive development on the trade front. The Fed cut rates 3 times before signaling a pause on further cuts. And also recession fears faded. So all the meanwhile, banks were consistent in their performance. They grew their dividends. They returned capital to shareholders. And so what we saw was quite a big revaluation in US banks from about 9 times forward price to earnings to 12 times price to earnings, and that's what really drove that share price outperformance in 2019.
And it's good that you mentioned valuations, because I want to talk about 2020. What should investors be focused on looking ahead?
I mean, as we've discussed before, we were constructive on US banks through all of 2019, and we continue to be so in 2020. And the reason really is twofold. The first thing I'd point out to you is valuation. So banks are trading on average at a forward price to earnings multiple of 12 times, which is at a significant discount to the broader market trading today at 19 times.
So that's pretty cheap for banks right now.
It's good valuation. And the other thing I'd point out to you is that US banks offer really strong capital return policy. So in 2020, we expect US banks to return up to 10% of their market cap through dividends or buybacks. There's very few sectors right now in the US that offer that proposition. So when you consider that in tandem with their valuation, we still think that there's good value in US banks for investors today.
So very positive on US banks going forward.
We are.
Monica, thank you very much for your time.
Great, thanks for having me.